Good morning and welcome to the Golden Nugget. Hopefully everybody is having a really good week. We had a holiday over the weekend, which was Labor Day, and I saw a lot of people. We went 3 for 3, by the way, just for any spoilers that anybody was waiting for. We went 3 for 3 last week, kept the win streak alive, 100% win rate, just absolutely killing it over these past few weeks. If you've been enjoying the Golden Nugget, give us a like, give us a comment, and obviously subscribe to the channel. Now, I saw a lot of people talking about, oh, this was like a no news-based pump, and we just hit new all-time highs on gold of $3,561 today, right? And I was like, you're correct. It's not a news-based pump, but as they say, show me the charts and I'll tell you the news, right? So we're going to get into all that. We're going to get into the 3 trades that we took last week that absolutely killed it. Whoever took those trades, congratulations to you because you absolutely killed it inside of the markets. As we've been doing, if you are here for the first time on the Golden Nugget, we appreciate you. Thank you so much for showing up. We will see you every single Wednesday at 11:30. Obviously, I am Drew Wolfer, your golden guide to everything that's happening inside of the metals markets and to anybody that shows up here every single week. Hopefully, you've been killing it on the trades because we give out trades every single week, and hopefully we continue killing it on the trades. But we also appreciate you so much because seriously, we would not have a platform without you. So let's get into the Golden Nugget. First and foremost, for the people that haven't been here, we are going to gauge gold. It means we're going to do technical analysis on gold. That's first and foremost, right? That's what everybody shows up for. They show up for the braids, but they stay for the trades, right? And our trades have been killing it. So we're going to gauge gold first, talk about the trades that we had last week, how they went, right? Any trades that hit and, that we took profit on, and any trades that didn't hit and maybe why they didn't hit, right? Secondarily, we're going to do the same thing for silver. Then we are going to get into what is called the commodity compass, which is where we talk about all the things that could be, happening inside the gold market, moving gold. Then we're going to do a special segment, which is called the Golden Nugget. That's where I teach you something that is inside, something that you could potentially learn, or a concept that you could potentially learn inside of the Golden Opportunity, which is the training that I brought out in conjunction with, obviously, the legendary Verified Investing platform that teaches people how to trade gold, how I have an 86% documented win rate that you can check anytime that you want. They are putting that on the site right now just so that everybody can go and verify. It's got links to everything, links to my call outs, links to when we took profits, losses, everything transparent for you over the past year, right? Ever since I've been involved in Verified Investing. Then secondarily, we are going to do 2 special reports, okay? And I'm not going to tell you what those special reports are, but you can probably guess what they are. Yeah, let's just get straight into it. So the first thing we are going to do, we're going to gauge gold. All right, let's get on here. And now what we see on the gold charts, we see us getting accepted, and I'm going to zoom out to the daily chart, okay? We traded this parallel so much, okay? So much inside of Advanced Trader Insights, and we absolutely killed it back since, I believe it was like late November of last year, maybe mid to late November. This is 86% win rate. A lot of it came from trading this channel and then trading this capitulating right here. And if you know anything about trading, you know that trading in capitulating markets is extremely, extremely hard. And inside of VI, right, we absolutely killed it trading this capitulating market and on the Golden Nugget, right? Because we've been doing this for a few months now. So a lot of people were like, hey, this is a no news-based pump. I would beg to differ. Okay, we have now gotten accepted, which we've been talking about this for weeks, back into this parallel channel, right? The top end of this parallel channel is running you up to about $3,750, and then probably about $4,000 by year end. Now, we're now in price discovery mode yet again. This was price discovery. This was price discovery. Then you kind of saw a bunch of capitulation. This is what gold does, man. This is what gold does. I am a metals expert. I know how the gold market works. It comes in, it sets these highs, it capitulates, it takes another run, it capitulates, it hits another run, it hits another run, capitulates. We got a lot of capitulation here. Then it likes to hit another run, capitulate, right? So we got to figure out where the top's going to be on this, and that is why we used what is called the trend-based Fibonacci extension. You can find this up here on your sidebar, which is right here, trend-based Fibonacci extension. I'll show you how we pulled it and where we pulled it from, okay? Just really quick, this is just going to be a real quick masterclass on how to predict where the market could go after you've set a new all-time high. So you pull it from the ultimate low to the new high, and then to the new low. And that will give you your next levels to then kind of target. Okay. And as you can see, we topped out here at this 1.618 level, kind of pulled back, blasted through it, got almost to the 2.236. We used the 1.618 as support, and then we got into this capitulating market. Now we are coming up to this 2.236, and then obviously where we want to run it to is the 2.618, which is right here, and that is at about $4,000. Okay, so what do I mean by show me the charts and I'll tell you the news, right? Because a lot of people said, this pump was like not expected, a no news based pump. Well, I beg to differ, because I've been talking about this for a very long time. A macro ascending triangle. This, a lot of people would think this is a bearish pattern, and it's because they see these, okay? And this is what is called a rising wedge, okay? And these look very similar. The difference is, though, it has a flat top on it. And what it's telling you is it's banging up on this resistance once, twice, 3, 4 times, and usually on the 5th or 6th hit, it blasts through it, because you can only bang on resistance and supports so much. So as you can see, it's setting higher lows the entire way up, showing that the market has upside, right? And this is bolstered by things we'll talk about in this segment, central bank demand, things of that sort, right? Now, we have officially broken out of this. I would be waiting for a retest of this to start entering longs, okay? But let's talk about the trades that we had last week, okay, that absolutely killed it. Absolutely killed it. Okay, we'll take this macro ascending triangle off of here. I just kind of wanted to show you that, just to give you some context as to, why these pumps happen and how you can predict them. And I teach you all this inside of the Golden Opportunity. I highly suggest people get into it, right? Okay, now, where are my Golden Nugget trades? Okay, so here's all the trades that we were giving out. Obviously, this trade did not hit. We never got the breakdown there. We can delete this, right? Look at that bad boy. We gave this out, I believe it was last week. It was 2 weeks ago, and we were just waiting for it to finally hit our profit target, which our profit target was obviously the bottom end of this channel. But, let's act like you didn't take it all the way up there. You got your profit last Friday, okay? Which was an absolutely beautiful move. Let's measure this move. And again, once they get my win rate up, which we should have it up very soon, I believe it should be up by the end of this week, you can go and check all this stuff for yourself. So that was a 3% move on this. Absolutely killed it on that trade. That's your first trade that hit. Now, what was your second trade? This is where we had a triangle, where's it at? Give me 1 second. The ascending triangle. Sorry, not the ascending triangle. Where is my symmetrical triangle? So this is where once we broke up above this, we added to our position here, and then bang, obviously our target was, the same target, but we took it all the way up to the bottom end of the trend channel, and bang, as you can see, this is just for people that didn't get on this trade last time that we called it out, and this was a almost 3% move by itself as well, okay? So we also had a third trade that hit on silver. Wow, that trade was absolutely insane. We won't talk about that until we get to the silver snapshot, though. This is an exciting week. Obviously, we never got this trade, right, because it just never came back and got down there for us. We never got this trade because it didn't break down, so we can delete both of those, right? Then we had these SFPs. We said, hey, if we reject here, which obviously we didn't, we just ran straight through it and then used it as support to keep going up. You could have entered long here, right, if you wanted to add to your position. I did not advise anybody to do that. Secondarily, we had an SFP right here. Again, ran straight through it, used it as support, could have added to your position. Would you have added to your position, understanding that the bottom end of the parallel channel was right here, and you didn't have much juice, you probably wouldn't have. So I did not advise anybody to do that. Then obviously we never got down here. That was a no trade. Now let's give you the trades that I came up with for this week. Okay, so first and foremost, we have the parallel channel. Okay, we can short this parallel channel if we lose it. Okay, and forgive me for not having that on there perfectly, but if we come down here and we lose this parallel, and what do I mean by that? I mean, if we come down here, we lose the parallel, we back test it, we need a confirmation candle, and we back test it, we can try and run it first and foremost down to this 200 moving average, secondarily right down here to this support at about $3,362. The first level will be at about $3,420, somewhere around there, but it is a dynamic level because the 200 moving average, it moves every single day on the hourly chart, okay? So you're looking at an entry on this parallel somewhere around the 34.90 range. So if you lose 3,500, that's where you're going to be looking for your shorts potentially. But if you don't lose 3,500, right, and you bounce right here at about 34.95-ish, or even at the 50 moving average, right, you can long this, and you're aiming for the midpoint of this channel somewhere around, you'd take it from about 34.95-ish to about 36.10, 36.15. And then secondarily, you've got your 2.236 trend-based Fibonacci extension level, because remember, we are in discovery mode, right? We're in price discovery. So we have to try to predict where the market is going to go, okay? And this is your first key level of resistance. Now that we've gotten above the 2.0 level, the 2.236 is at 36.57. So that would be your secondary take profit. Now, obviously, there is a couple of others, right? Now, this is an ascending triangle that I found. Give me one second. Where's my ascending triangle? Boom, boom. We got to get to the ascending triangle. Bang. Okay, so if we come down and we actually lose this, this would be your first kind of level. As you can see, the 200 is about to run into it, right? If you do short here, I would be looking to see what happens here at the 200 moving average, and this would be your back test of, on the daily chart, the macro ascending triangle, okay? So right here at about, call it $3,435 to about $3,440. That's where you would be looking to long, probably up to about 36.57 or the midpoint of this channel, okay? And then your next scenario is obviously shorting here, okay? And this is shorting the ascending triangle's top, okay? Now, what we have is, it's a rising wedge. Sorry, I put ascending triangle. I was trying to set this up so that we didn't have to like do this TA. But I do see something on the daily chart that it could be not so awesome, right? So let me just make sure that these are labeled properly first. This is rising wedge. And we're going to go back to the daily chart just really quick so that I can show you exactly what I'm talking about, okay? So let's get this macro ascending triangle off of here, and let's look at this rising wedge, okay? Does this look like a rising wedge to you? You know, like, let's be honest. It definitely does, okay? And I'm going to take the parallel off, and bang. So as you can see, well, let me get this symmetrical triangle off too. As you can see, this is a rising wedge, okay? And these tend to break down. So you can short up here, okay? But you have to set your stop loss pretty tight, because once you get outside of this, you could be running this all the way up to 36.50, okay? So you do have a shortable opportunity here to take it down to the bottom end of that rising wedge, okay? And then secondarily, if you lose the rising wedge, you have an opportunity to ride this back down to potentially the 1.618 right here, or at the very least, 31.78. Are we going to get there? Probably not. I would be looking to probably take profit here at about 32.69. That's more of a swing trade, that's more of a long-term trade. We'll just call it like it is, right? That one right there that we have on the screen right now. So now that we have gotten through all of that, okay, and you kind of understand what's going on, let's get into what is called the silver snapshot, because silver has now set, yes, you guessed it, a new 14-year high. It seems like every day we're getting new 14-year highs and new all-time highs on gold, finally again. But let's talk about the actionable levels, okay? Now, I want to show you a couple of things with in terms of what we already did, okay? We absolutely killed this trade. Absolutely smashed it. Target acquired, entered at the 200 moving average last week, alerted everybody on this stream. Bang, took it up. Perfect entry, perfect exit before the pullback, right? And I know it kept running. If you left a runner, you're wildly profitable, right? No matter what, you took at least 4.4%. That's with no leverage. 4.4% in literally 2 days. Now, I know a lot of people are like, oh, Drew, we could have squeezed more out of this. That's why you leave a runner, first and foremost, but you always lock in profits up here. But what would have happened if this rejection happened and then it just fell right back down to the 200 moving average and this little capitulation zone? You'd be feeling a lot worse about this because you just turned a 4.5% winner into a 1.5% winner. Wouldn't have felt so great, right? So just as much as these things can continue to run, they can also pull right back. So I'm glad that we took our profits. Nobody will ever laugh at you for taking a profit. And you will never go broke making money, okay? Unless you spend it all on dumb things, right? Obviously, we did not get this trade. This was a no trade because it never came back down and tested that level. I wish we would have got that trade because we would have been positioned so awesome. Obviously, we never broke down from here. That was a no trade. Right, this is another one. We never broke down from that 200 moving average. That was a no trade. Then we had our SFP, right, which was the swing failure pattern. Obviously, we ran through it and, invalidated that SFP. So, thank gosh that happened because if you would have entered this short, you could have, if you're a scalper, you could have, and then you could have just taken profit at the 50 or the 100 moving average and then called it a day and repositioned long. But unless we actually swing failed here, I did not tell people to short down to this previous swing low. So, obviously that was a no trade. That's why that was a no trade, right? We never got back down to this level yet again. So that was a no trade. And then this obviously was a no trade because we never even came close to testing that. And then, yeah. So that's kind of what we're looking at right now. But let's talk about what we can do in the markets right now, because we are now in, for all intents and purposes, what I would call price discovery mode on silver as well. Okay. So you've got a few trades. Okay. You can short up here at the 1.5 fib, which is at about $41.22. You're going to see pretty decent sized resistance up here at $41.22. Okay. We have now broken outside of this upward sloping parallel that we have been watching and trading for the better part of a year, right? Maybe 2 years almost, I believe. Yeah, so January of 2023 is when this kind of started. And as you can see, we've been inside of this parallel for a very long time. It's very rare that these break out or up, but as it sits right now, it has broken out and it has broken up. So we have to take that into account whenever we're looking at our trades. So what I'm looking at is if we come up here to this 1.5 fib, and again, this is the trend-based fib that we pulled to kind of understand where we could be potentially going. First resistance, $41.22. Ultimate resistance at $43.14, right? That's the 1.618 fib. We could short here, okay? We can short here. Let's see what the RSI is doing. Yeah, RSI is getting up there. You're going to see bearish divergence after bearish divergence here printing. As you can see, lowering highs on the RSI and upward highs on price. That's a bearish divergence. If you come up here and you reject, you can short this all the way down to this zone right here or this previous high, which would be right here at the top end of that trend channel, okay? And so this is the trend channel that we broke out of, this green line, right? You would short it down to about 40 bucks. You'd see a lot of pressure there, buying pressure, right? Secondarily, you can short again if you get inside of this parallel again, okay? You break down, you come back up, you back test it as resistance, you short, and you bring it down to pretty much this little double top range right around here at about $39-ish. But obviously, trading is managed. Watch that 200 moving average right here whenever you are doing that short, if you are doing that short. Then we have the long, right? So if we were to come down here and bounce from the bottom end of this parallel, because now that we've confirmed outside of it, we came down within about 16 cents of it. We never actually got the real back test of it. We came within spitting distance of it, but we didn't quite get there. So if we come down, reject, and we bounce, you could see a further move up, back up to this 1.5 or even further to the 1.618, okay? Now, the other thing I want to show people is we did have an inverted head and shoulders, And if you're seeing this on the charts right now, just know that this has already played out. The move has already been made. Do not trade this. Do not trade this, okay? Now, you can trade this as a potential bounce point, okay, because this is going to be a nice little support, as you can see right here from the neckline. This was resistance, 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 and then now it can be support, okay? So you can be looking, and if the 200 moving average actually comes in and then intersects that, right? If you get this bounce right here, this is where you can start thinking about doing a little bit of a long, right? And riding it back up to the 1.5, which would be right here, 9.3, I, H, and S, and 200 MA bounce. Boom. We will put that in there just in case, just so that people have that trade. Now, the other thing that you kind of want to watch out for is we did have a rising wedge that was happening. Obviously, we broke down from that, so this one isn't, as pertinent anymore. But we did have the symmetrical triangle that we broke out from, so this could be a potential support down here at about $37.92, okay? So those are the levels that you're going to want to watch for. And then if you look at your actual range, your kind of like micro FRVP, as you can see, we are now breaking outside of this. So you are going to see that we're breaking outside of this value area high as it sits right now. And you could see support here at about $40.40 to about $40.27 as well. So this is the FRVP. Now, with that being said, let's get into the next segment, which is going to be called, as usual, the commodity compass. Now, I've got all this on my screen. I want to be cognizant, conscious, and respectful of your time. Let's get through this, and then we will, take it from there. So, what's affecting gold today and, into next week? So, we have a record rally, okay? We have gold spot hitting over 35.50. We have futures rising to over 36.10. This was driven broadly by safe haven demand and inflows to ETFs and central bank buys, and then obviously escalating market uncertainty, right? And widespread expectations of the Fed lowering rates. So what do we know about the Fed lowering rates? Lowering rates, for all intents and purposes, raises gold, right? Because it's lowering the opportunity cost of people actually, loaning their money out, right? They're going to make less money if they keep their money in the bank, right? So it makes non-yielding assets like gold, it makes it more demand, right? Okay, secondarily, we have tariffs and Fed independence that has been under pressure, okay? So the U.S. politics, there's a lot of drama in it, okay? Namely, the administration is seeking expedited Supreme Court rulings on recently invalidated tariffs, okay? And attempts to remove key Fed officials, which is kind of challenging their, let's just call it like their, privatization. Okay. So this is going to heighten uncertainty and then fuel, gold's demand. Okay. Then we have the ETFs that has surged. The demand for ETFs has surged. The holdings of the SPDR gold ETF, which is the largest one, jumped 1.32% in literally, I believe, 3 years, reaching its highest levels since August of 2022, okay? Signaling strong institutional conviction. So this is going to help bolster kind of like a floor for gold. So you're not looking, you're looking for short-term shorts here, but you're not looking for short-term shorts, or you're not looking for long-term shorts. You're looking to capitalize on small moves down to then find good positions to go long, okay? So the total holdings of this SPDR trust is 990 tons, okay? So almost 1,000 tons. That raised by 13 tons, 1.32% just in the past few months, right? And it's worth approximately $112 million, just that increase. Their value increase is worth about 1.47 billion, sorry, not 112 million, okay? Now we have institutional conviction inside of buying, okay? That means central banks, that means institutions, that means governments, okay? So secondarily, we have digital gold innovations called PGIs, which we will talk about in a special segment to come. But I want to talk about the Golden Nugget, and that's where we're going to get into the PGIs, okay? If you're inside of the Golden Opportunity, one of the dozens of people in there that are absolutely killing it, you know about things like this, and you know how to read them, okay? But what is a PGI? It's called a pooled gold interest, okay? So what that means, a new digital instrument. Okay, and I've got the definition right here, so I'm just going to read it really quick. It allows investors to hold fractal yield generating ownership of physical gold. Okay, stored in segmented accounts. That is key. If that is yielding, that is critical for gold, because usually gold is just non-yielding. You just hold it and it, the price increases over time. Now, there's a key difference, okay? Because this is digital and transparent. There's a key difference in between this and stable coins. Okay, first one is the issuer. The issuer for PGIs is institutional, and it is the World Gold Council and the LBMA members, okay? Then the stable coins, they're issued by private blockchains like Paxos or Tether Gold. And if you know anything about Tether, you might not necessarily buy your stable coins from Tether for the gold-backed stable coins, right? Now, the ownership model. It's fractal, okay, and it is segregated. It's a co-ownership of a segregated gold pool, whereas in the gold-backed stablecoins, it's tokenized claims on allocated or unallocated gold. That's key. This is physical segregated gold pools, whereas that over here at the stablecoins could be unallocated gold, right? Then the custody is, this is held in LBMA, and then obviously for the stablecoins, it varies, okay? Then we have the regulation standpoint. It is subjected to traditional financial regulations like every other instrument. And then, obviously the ones that are regulated stablecoins, they are lightly regulated or they're offshored. Okay, so the TLDR on this, okay? PGIs are essentially like the Wall Street's version of digital gold, okay? Regulated, institutional, focused on collateral, okay? Transparency and yield. And gold-backed stablecoins are more like, crypto native coin versions, and they're optimized for speed, accessibility, settlement, and DeFi utility. Now, let's get into our fifth segment, which is going to be called the market movers. So gold just hit its fresh new all-time high above 3560, okay, as rate cut expectations kind of mount. So we are seeing record buys and a nice price floor in gold through these institutional buys, okay? Now, what you're going to want to pay attention for, the 16th and 17th of this month, the FOMC meeting, and obviously we're expecting at least 25 basis point drop. If they come in at 25 basis points, you might want to watch for a potential, buy the rumor all the way up to the 16th and 17th and then sell the news once that news comes out. Now, if they come with a 0.5 or a 50 basis point drop, you might see gold continue to rally, but you might see a nice pullback on profit taking once that actually happens with when Powell talks and the Fed actually kind of tells you what's going to happen on the 16th and 17th. Secondary thing, and this is getting us into the sixth segment, which is called the central bank watch, okay? Those pooled gold interests, central banks are now pivoting to that digital gold. So they're stepping up gold accumulation to hedge against U.S. policy risk and U.S. dollar devalued, okay? So the World Gold Council's PGI pilot is kind of helping to bolster demand for gold, because they're going to buy that physical gold, and they're going to let people like you and I, right, or even people that might not necessarily be able to buy an entire ounce of gold, they're going to let them own fractional pieces of gold. Now, you can go and buy a 1/10 bar of gold, but who does that, right? They want to do the digital version because it makes it accessible, okay? But the one thing that I want to make sure that people understand is whenever we see central banks buying, we need to pay attention for what's going to happen in mid-September, so that we understand what happened in August, how much central bank buying was there, right? My guess is there was quite a bit because we had a nice floor on gold, but we want to see that because last month was like a record. It was like 126 tons, something like that in July. Now, the last thing I want to talk about, what is coming up this week that you need to watch for? Because seriously, there's going to be some movers. Today at 10 a.m., we have the JOLTS job openings, okay? That is slided to edge lower to 7.4 million. Then we have obviously the factory orders and the beige book. That is all happening today, all right? Then we have tomorrow, which is Thursday, September 4th, ADP employment for August. We have the weekly unemployment claims. We have the ISM services PMI. Pay attention for that. productivity and labor costs, and then obviously the trade balance. Then on Friday, this is a big day, non-farm payrolls, August jobs report, okay? It is expected to be around 75,000 jobs and 4.2% unemployment. Unemployment comes up higher, and those jobs come in less, and watch for the revised numbers from the previous months. They might revise them lower and revise the unemployment higher. This is going to include hourly earnings and unemployment rate. If that comes in hot, right, where they don't do, at least, keep expectations or, do better than the expectations by creating more jobs and less unemployment, you could see gold continue to run. And then obviously next Tuesday, we have the PPI, baby. That is the headline and core. And then we have the crude oil inventories. So watch for PPI next Tuesday. That is stuff that makes the markets move. And with all of that being said, I appreciate everybody so much for showing up. Seriously, humble appreciation from our side. We would not have a platform without you. We have been killing it on the trades. Let's see what we can do going into next week. And you have the levels, you have the trades, you have all the actionable insights. You know what's coming up that could move the markets. And if you get inside of the golden opportunity, you will know about 100 times more. So everybody have a wonderful day and have a wonderful week.
Hey guys, Lawton here with Verified Investing, back with another video from Kinesis. Thank you so much to Kinesis for sponsoring this video. So going onto the homepage, you can see that I'm logged in to Kinesis.money, and I want to highlight something I really think is cool. You guys know that I'm a trader, a pro trader here at Verified Investing. And did you know Kinesis gives you another way to trade? That's right. You're able to directly trade on the Kinesis platform and earn physical gold and silver while doing so. You can see here their trading platform and their charting platform is actually integrated with TradingView. That means the same charts that I'm used to using, that Gareth is used to using, that all of us here at Verified Investing are totally accessible for you to use. So there's a seamless transition if you want to chart on here. You can even see the order books and the history, right? So if I want to put in a trade, I can put in the price in USD or the amount in KAU as one of their pairings. I can set a limit order, stop limit, trailing stop, whatever I want here. And I can do good till cancel or fill or kill or whatever else I need. Additionally, I can see all of my orders down here. Going on the left side, I can see all the different pairings that Kinesis has on their exchange, such as Bitcoin and Ethereum. Really, really cool. So not only is it a platform that lets you earn money and earn physical gold for doing anything. If you're trading cryptocurrency anyways, Kinesis could be an option for you as well. Kinesis is really cool, and there's way too much just to talk about in one video. But if you want to learn more about Kinesis, go ahead and check them out in the link in the description. Thank you so much to Kinesis for sponsoring this video, and see you guys next time.